Hello friends, welcome back. Let us quickly go through 2 weeks of these boxes. The idea is pretty plain and simple. When the environment is set up for a given bias and given direction, we need to enter. And at this point, the assumption is that we have done all the required analysis. And now we are in this last phase of pulling the trigger. Now this is just going to talk about the event with the respect to boxes and nothing more and nothing less. I'm going to mark the box for entry and retest. So let's start here. This is 720, 720. I just went back 2 weeks randomly and there we go. Now we go from left to right. And at 10 o'clock or 9 o'clock, in the 9 o'clock time frame right here, there was no boxes here. They came at a later time frame on the top. Okay, and then we will see a bunch of boxes coming in as the algos pile up. We're detecting, as I said earlier in the previous video, that we are detecting the bid and ask and where we think the flips will take place. When the bid and ask has flipped, we are looking for the retest of it area, right? So there we go. So let's do one thing. Without having any other context in place, we will just use these oscillators to pick a direction and see how the boxes can be used. So the boxes showed up. When the bar is closed, the box is complete. There are two things to remember. The true use of that is retest. That is how they are designed, because the buyers and sellers came in, they pushed the market in a certain direction, and we come back into their phase, and there's a retest. And these levels of retest will be remembered in the upcoming days as well, not forever. So keeping that in mind, we have what we do is few ticks below this, we put it box like this. Okay, so what is this defining for me? It is defining for me that when the market comes back from this initiative move down, right, the oscillator here may not be set up all the way, it is set up here. We will see this is the beginning of the day. I can probably put a few more days back, it will start showing up the data, but you got the point. So the main thing is, on the top the boxes came in, and then they pushed the market down, and then we have it right back on their face, and then we had a bigger wave move, right? This is example of retest. Same thing happened here. This is where they say keep track of double tops, yesterday's tops and bottoms, and weekly tops and bottoms. They also say that market will also flush 27% of stop losses at these previous day's highs and lows, irrespective of all that marketing phenomena, which works most of the time, but sometimes it doesn't work, right? So what we are saying is, you think about this is a true sell zone because the boxes are sitting on the top, and they will come and visit that area. All right, so having said that, I'll put a down arrow here. All right, and then what are we going to do? We are going to duplicate it. So you can see this was a good reference area. Extreme push down, extreme pullback. Maybe it's a news day, we don't know, we don't care, because we are using the modeling architecture. And look at this value at price. It should be good to go in the red zone, which is right here, even better. I'm starting off here, right? Okay. All right. So if you look at the profit and loss ratio. This is 1 to 3. Taking a 6-point profit, 6-point loss is not a long-term, big, massive profit strategy. You're trying to take the day's high or the low and ride it all the way, because 70% of the time they will rotate. Other 30% of the time they will just go one side and they will jam the market on one side or the other. So that's how this is structured to be traded. And this was yesterday's low. I'm talking about these 2 days, right? This is today, this is yesterday. All right. And one more thing to remember is, see, this is your flag pattern right there, which means their trend is down, but they're trying to consolidate. Now this trend pattern, if you just double it up, that gives you the target. Where market is going to reverse, right there. So that is the challenging part to understand, that hey, is this a reversal or this is a midpoint? And we have this sentiment analysis already established, because the way it is going sideways in the middle of the trend. So 2 things can happen. One thing is, are you going to go long, or are you going to short, or is it going to be continuation, or is it going to be reversal? So this box explanation we are doing is that let it play out and let market come to test it on a critical pivot level, and critical pivot levels are yesterday's highs, lows, weekly high lows, and C54 levels, and 25% quarter levels, which we have in part of the methodology. And we have Charlie's. So with Charlie sitting there, what to do, right? Anyways, so if this was the intention that this is 50%, we saw that. Okay, if you attempted to say take a long here, right? You saw the boxes, you saw the oscillator, something is going on, boxes showed up here, and you took a loss here because you thought this is going to come back and it's going to punch up, but it was 50% of the move. You took a loss, let's say just for 1 point loss, whatever it might be, right? So just for sake of argument, then what we do next? At the end of this 50% move, we have a box here, right there. So our initial analysis, just looking at the raw data, nothing else. I'm not looking at any, was this a great level to trade or not, just in context of the structure movement. This could be 50 because the flags often describe the 50% minimum move. So it was 50. I just showed you that, right? Now the box shows up. Now this is completed the structure. And we don't know what happened on the left side either, which is fine. So what we do next? Now I'm interested in taking long in this area. When the box comes in at the bottom, at our target, and we have value at price, ready to go up. Now everything is lining up. This oscillator is also on the bottom. Hopefully you can see it. If not, let me stretch it. As you can see here, everything is now lined up, right? The structure came first, because there are always buyers and sellers in every bar. We are only interested in a specific kind of block trades which are defining the buyers and sellers. Market is every bar, there's a buyers and sellers. They are conditions. We cannot see from here. You look inside the bar and see, was this bar where the bids were lifted, buyers ran away, or the ask disappeared, the market went up, right? You have to see inside the bar what happened. We cannot see it from here. But based on this structure, and if you can do our analysis, people who are in professional trading, they can do that, right? And they know where the targets are. Now it makes sense. At suggestive levels of trading, all things are lined up, boxes came in, then you never took you took the whole thing move up. And they are rotating these boxes. buyers and sellers. Sellers came here, buyers came here, sellers here, boom, 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 whatever. There could be continuation pattern, we don't know, right? Unless we look inside the bar. So this is a step before what is going on, and I will show you today inside the bar patterns as well. So that is how, when you are going short using these boxes from the area, when everything is set up correctly, one tick below that you go in, and top of the box is your stop loss. So just like here, if you wanted to go long, one tick above this long, and it stopped out right, let you stop you out, that's fine. Then you know by virtue of that, this is not the end of downtrend but a midpoint, because this looks like a flag pattern. Then you can do measurements as I did, and you got the target. Now you're looking for boxes here. You ignore all the boxes in the middle, but you will not be able to trade it because this is 5-minute chart. You can also go to 1-minute chart, right? You're not going. If you want to trade the entire swings or the day, scalping is models will not work. We can go this can go down on 2-minute chart. You can also go back in 1-minute chart. Too many boxes will start showing up because their algos are moving the market. All right. Okay. Great. This day comes. We have reference of this day. We have reference of this day. We have two reference points. Nothing else. Came back into this reference point. This is where we have a real supply zone and real buy zone. And what is the oscillator here, right? So now look at this value at price and oscillator. They are both aligned. Now it makes sense for us to intercept these profits and go short. So now this box came a little late. It was a very fast move, big, huge bars. That's how it is. It is going initiative. So what do we have here? We have a reference now, a different kind of reference. So let's draw those reference lines from this box. So at the one tick below this, you take a shot. So this is your shorting box, which is the smallest box right there, right? The market went down, it came up. That's why this is a box here, box 2 and 3, which are inside this bigger box. They already aligned here correctly inside the box. And that's why you see market went up to retest this area multiple times. We also discussed that this could be either the termination point or 50% point. So this becomes a very critical area where market did go down. So this was a 50%. If you can just see this is a 50% move. If I just check it out and let's move it down, right? And you can just see same pattern here. Here was a flag pattern. Here it was a big bar, multiple clustered bar in the middle of the move. Same thing. You got the idea, and you got the move set up here correctly. At this point, you have the oscillators ready to go up. No, but there were no boxes here. So this is the effective use of a retest of these boxes. Market moved down. It went come back up to the box one time, second time, third time. So this is not a level, it is an area. This is a range, and you should be aware of it. And we trade it right here when everything lined up. We trade it right here when everything lined up. When we're not looking at any other chart, just this specific chart. Now this area is still captured here, in the essence of that is still captured here. So next day, now you see this, we had this box in this reference point here, it came right there. I can just extend it forward right there. Again, what happened here? Yesterday's highs, lows, boxes at the extremes, they got retested here. Again, now I'm interested is to go long as a retest, or I can wait for this box, because I am projecting the market to move in the opposite direction. Now I am interested at looking at these boxes. Right, there is an entry. Initially this is a stop loss, or bottom of this is a stop loss, right? And then we go and look at the oscillator, ready to go long. So what happened here? Market boxes showed up in the bottom. Great. So we have reference on the top, a reference on the bottom. It touched it again, go down, it went down, and the bottom, this one on the left side was retested again. This was the 50% retest. Now this is where if I do Fibonacci, this 61 point Fibonacci is coming there, right? Is it a Fibonacci or is it the buy sell boxes? You can ponder on that. But you got the idea. The context was already, you have to keep this context for last few days in mind. Weekly high lows, yesterday high low, 2 days back high low, and where are these boxes? If you're going in this up direction, now you're going in up direction. Okay, then what do I do? Well, I have these reference boxes. Every time they come back after a small rally, comes back into the boxes. So this becomes a retest entry in the direction we are going. And look at this, right? Makes sense. So what do we have? We have another small box. You can just buy entry, stop there, or just keep a small loss. But again, remember 1 to 3, 1 to 3, 1 to 3. 1 to 1 is fine if you have very high accuracy. 1 to 1 is fine too. But remember, 1 to 3 will eliminate the losses much effectively. And then we retested this one. Okay, now what do we do? 1 box, 2 box, 3 box came, right? So they can enter short here. This also is a retest area. So it came back up, retested again. Look at the oscillator on the bottom. So, sorry. So this is how we put together the price dynamics, the stopping points, the targets, the reflection points, right? Okay. So this has been tested few times. The bottom has been tested once, top has been tested and rejected 3 times. Now what are we expecting? Let me delete all. So what is going on here? We went up, got rejected again. Now we have boxes here for entry. We also have boxes here. These are overlapping boxes here on the top and the bottom. Same as this guy, right? So they are leaving the trace. When they leave this box, they come back to retest it. And look at the oscillator at that point during the retest phase. So once you are in this, you can start taking the longs here, right? When everything's lining up, or if you want to wait for it, wait for the small box to show up, and we take the long. Market came down to retest. There are so many boxes here. See that right there? There was battle was going on. It's middle of the night. But you can see all these boxes, there are 3 or 4 boxes, came back to retest it. So this was the recent box, came up, came down to retest this recent box. That's why you don't want to go back too much. Yeah, I understand the support became resistance and whatnot, but remember, the algos may not be tracking all those trades for like multi-weeks, not intraday algos anyways, right? So this is how, again, it comes back to retest it. What is the oscillator telling me? Valued price is not showing that, but you got a trade. So you got one trade here, pull back. Now if I do this Fibonacci, this is again 60%, 62%, 63%, right? Let's call it 63. From here to here, 63 pullback. From downward here to here, 63 pullback. From here to here, up move. This is retracement, 60%, 63%, 64%, isn't it? So just all technical analysis, nothing much. So that is the way to use these boxes. This is how we have been defining them. Way to retest and re-enter the trade. If you want to go initiative using these boxes, that means start a new trade. You're better off waiting for these retest levels right here. See that it came. You don't have to go back 1 month. And it went in a hurry at this price. So on the top, where is our boxes on the top? This is the range. So it came back, retested, rejected, came back, rejected, rejected. Now you see how these has to be referenced in rotation. Okay, if you take this bottom all the way to the top, and what kind of retracement is this? Isn't that 72%? Maybe 75%? So retest, as I said, is the purpose of these boxes. You can go initiative also, but only at the level. So if you wanted to go initiative, there are 3 big boxes here. 1, 2, and 3. So one box is here, big one, intermediate one, and a small one. So once you see it got rejected from here, above this is long. Stop loss is this. So you got 1-to-1 ratio, 1 to 1.5 ratio. So when it came to retest the top, right there, look at the oscillators. Okay. Now this is, as I said, keep an eye on weekly high and low. What is this? Weekly low. Weekly high is there somewhere, right? So they are retesting these levels. We have better ways of doing it, the targets, but again, you got the idea. So now, as I mentioned, if you take the A, B, C targets we have discussed, right? A, B, and C. Where is my A? Where is my B? Where is my C? This is forming a base. You can do this A, B, C. This should be 161, extension of this A, B, and C. Let's try and see. 1, 2. We can do this one too. Let's try 2 of these. 161. Let's make it fat. So that is 161 right there. ABC 161. Now I have to check. Okay, I have this oscillator, right? I have this oscillator setup going on here, here, and I see exactly on the top they are piling up the boxes. Now we have other sophisticated ways of targets, but here we have a lot of boxes. You can just go below this, right? Which box will they come and retest? It depends on have they collected all the contracts they want before they make the move. Same thing, you're going to shorten anywhere. Stop loss is here. Initial risk is there. Rest you have runner. You have to run the runners. And we retested. There's 6 boxes here. The bottom was retested. But if you're holding it here, stop loss is there. You just let it run. So these are the, as I said, and then now this box was coming from 5 days back low. The box came in, and this is obviously at 1600 hours. You might not be trading there. You must be counting cash by end of the day. All right. Now this box came. This is the smallest and lowest box. Went up, came to retest it. Where is it going? You can do A, B, C of this range. Let's try it. Let's try moving this guy. Let's make this A. Okay, let me just do it again, I guess. A, B, C. Let's do 161, make it fat. The other levels too, we discussed it, right? So A, B, and C, 161 is coming there. Okay. Once we are there, I should look for boxes, and there's the box. Short, you can short it at noon time. Then we have this box we already discussed. It got rejected, right? So it came. This big box came. Every time you have a big move, that area is retested. This is what you guys talk about by zones, sell zones. It is all the retesting of these levels, which are formulated as algos are moving up and down. It doesn't talk about the amplitude move. And with respect to 3 p.m., this is already long anyways. Okay. And then what we have from this is a pullback, 38% pullback. Box shows up. Algos are ready to go. They go to 131. Sorry, 161. They also go to retest of these clustered boxes. So I think you understood the consumption of this tool set, this box, what it does, what it is designed to do, what is it trying to track. And as I said, this is 5-minute chart. Algos are rotating. You will not be able to catch all this properly. So we have to put the context correct, first of all. Where are we playing the game? So this is in the up move, bar came here, right? So I'll just put the lines here. Do I know they will stop at this point or they'll go somewhere else? We do, but not using this section. So this is where it is. So it came down to retest, rejected, 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 rejected. Fine. How many times? Why here? That's the magic. Now this is a lot of up and down, up and down. I understand. That is why you want. Now they're like boxes moving here, moving here, moving here, moving here. They're trying to reach in a high speed. This adding and adding and adding and adding, and then they all disappear. That's why they don't show up on the top. Then they show up on the other side, short below this. This is the box. So it could have gone to any of those boxes. So that's why this whole set is a range they pull into. It's not a line or a tick level accuracy. It is not designed for that. So it makes sense, I hope. Okay. 3 o'clock came. This is telling us shorting is a good idea. Algo box came precisely. We took a shot, came back to retest it, took a shot again. This was the retest on the other side, got connected. This is a box again carrying from the previous side, went up, got rejected. Do you see that? And in the context of that, shorts are coming, shorts are coming, shorts are coming. Gap open down. look back, look at this guy, went all the way there. As I said, don't want to go back all the way 2-3 months down the line. Just look on the left side and make the analysis. Was it a strong pivot? It was. It got retested. So this is the inside box, smallest box. If you have taken that, came back to retest it again. It's a Japanese session, so now this has a cluster of boxes on the left side. It broke down, entry first here, retest it here. Now this is where they can just go a little bit higher up too. This is where you have to have conviction that, hey, once you make up your mind, you go, right? And there it is. This is fine. This was support here, right? Resistance here. Now the timing, do we know what time to trade, where the big energy is going to be released? Yes, we do. We have 40 models just on timing the market. But that's not the point of this discussion. Okay, so if you catch early morning trade on London session, you should be able to swing it all. Swing it all, right? And sometimes you can't swing because then it's still, when it is rotating in this zone very lightly, big move is coming. If this is setting an our C54 level, right? Again, this is again retested. Broke the whole zone, retested. Okay, now let's look at the right side. It should come and retest it here. And then on the bottom we have other things. So this one, strangely or whatever it is, it missed it by a few points. The top was there. This was the guy who initiated all this. And if you look from this move from here, this is a retracement. How much? 78% probably. 75, 78%, right there. So this is where the numbers are coming from. 78 is 7 plus 8 is 15, 5 plus 1 is 6. 63% retracement, 6.3 is 9. 127% is 2 plus 7, 9. So when they flush stops at 127% extension of ABC, or if you do it internal, same thing. What I'm trying to say is, if you look at this height, this is a flush zone. There is a buffer flush zone. I cannot tell you the numbers, but there is a flush zone on each side, which you should be aware of in the range. But that is still considered inside the value. So, okay, we came back. So I'm not looking at anything in the middle unless I get to my ranges. Because as I said, algos are doing all this business. You cannot catch it. So we have to have the context and the location. This is the right 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 location. Right location. Right location. Right location. Keep an eye on this retracement from here to here. Okay. So once I get close to my previous levels, now I am interested in taking the shots. Let it break my most recent box and go down. If this is a retest, let the boxes show up first. Correct? and I just hide here, go long here. If I'm long, I'm not getting out. There has to be a reason to get out. And the reason is, again, take this range. What has happened? It has retraced from that range. How much? 75, 78. This is a planned down move. So once I get to those things, I'm looking for shorts. Shorts. Oscillator is telling me to go short. Here oscillator told me after 3 p.m. This is vertical lines of 3 p.m. 3 a.m. Sorry, this is a long area. Long area. Got that long. So you have to get that context, correct? Today also, right here, short, short, and short. Now boxes are coming in, cluster of them. Let it break down. If it comes to retests, I'm entering. So this box is here. Let's zoom in for today. It came back to retest it. Market was in a downward mood all day, below zero, value at price, below zero, value at price, below zero. Pull back, pull up, sorry, into the box. See these boxes, short. So these boxes are your reference frame where they are going to pull back to. From day one, it has been made very clear why they resigned, what to do with them. And once you are in the level, and once you have your level set up, now we discussed that 1 hourly they are basing a base. They're gonna start moving when there enough contracts are collected. Draw the trend lines, because it may take few hours. It may take few hours, means there may be 6-7 bars rotation going on, right? We already discussed that in the previous video. So the context is already, hey, I should be looking at longs. The long never came until this point. But what is this point? Can we go back 5 days and see if there's any reference points? There's no reference point. Like, I don't want to go back 2 months, right? That's not the point. So what do we do? Market went down. Now we have our targets. Let's try that target. Let me drop this 369 L2 level 2 3 turn 9 targets. 3 a.m. This is a oscillator also showing everything, so we will probably use this pivot to project where they are going. And what do you see? They're going there. This one projected through the degree conversion of price, that this is where they are going. Okay, they are there. What do I do? Well, wait for the box. If you want to use the box, wait for the box. Box showed up here, right? And it showed up here. As I said, the range, what it did, stopped, move up, give you a second chance, buzzed off back to this area where it started from. So the location, the context, the technical analysis has to be done properly. So you think about these rotation points. The crack, they go somewhere back. So if you're looking to go short here, well, there's a problem, because remember, we are targeting the reversal here, right? So unless you're a breakout trader waiting for this to break out downwards, let's do that. So we had this tool, it's telling us this is going here. Okay, the first target was here, it is going there. Second target was saying it is going there. Okay, and then the third targets, that's what they call 3 turn line targets. So this frequency captured the blow to the downside. What do you do next? The oscillator is ready to go. Now this has been also a divergence in the value at price. All day it was below zero. Ascending triangle of value at price. Box came. Box came. Box got retested. Buy in. Goodbye. 30 points. Early morning. Early morning. If you need money, you have to get up early morning. London in 2 sessions. You can trade 2 sessions. Get out with huge money, right? So this is where it is. So I think this is the effective way to use these boxes as initiating a new trade at critical levels, or use it as a retest of a critical level. Now let's say this was the case when boxes came. It came down, tested, moved some. When I'm talking about, these are 10-point moves, right? Rejections from there. It doesn't look much. Way I am presenting this. Then in the bottom, that's why I keep saying the boxes at the bottom and the previous extremely at the swings, they are more critical because the pivot was overlapping these boxes. So this is a critical level, right? So we have 3 boxes. 1 box here, 2 box here. So 2 small and 1 big one. So let's do the big one. Let's do a small one. That's what it did. It went off, came back to retest, and off it goes. Where is it going? We know where it is going. How do we know where it is going? Well, as a poor man philosophy, if you don't have sophistication, which is fine, A, B, C. So let's do ABC here. 1A, 2B, 3C. And you can do 161. I also gave it for free. $360. So this ABC is terminating at 360. So you can hold it. So this is A, B, and C. Now there are a lot of other techniques. I can see why these pivots were calculated. If I do a pivot projections, cannot do it in public. This is part of level 2 coaching. So people who are invested, that's what we need to respect, that investments, right? That's all. Nothing personal. So A, B, and C. So 300 is away on the top, right? 160. We can do that. So what do we get? So 160, 300, a lot of rhythms, a lot of market going on. It is trying to reach a certain target. And that target is obviously after hours, can't do much. Just gonna chop off. So this is how you can do the analysis of these boxes. This box is very good for us because it was retested 2 times. And then again, as I said, do not trust these to hold forever. Algos shift their sentiment. So if you were referencing this yesterday's high and low box area, they broke it, and what happened? This box became a resistance box later on, right? So this was a loss. If you took this trade here and here, you had a huge profit. Now it comes to retest this box because it is also yesterday's low. It did not do anything at all. You couldn't stop it. So that means the buyers were not strong here who pushed it. The seller is again in control. If you look at 4-hour chart and higher time frame chart, seller is in control. These are all pullbacks into the structure down move. But if you, as a trader, you came here, you saw a box on the top, box on the bottom, and there we are. Okay. Market started moving down, sideways. Cluster of boxes, retesting, cluster of boxes, cluster of boxes. So two things can happen here. One thing is this, which is this could be 50% point of the move. I hope you saw that. Let me do it again. If this is a flag pattern, we did this. We said, okay, this 61% retracement pullback, it'll go up. It kept going. So if you take that loss, that also gives you some huge profit, upcoming profit. Why is that? Simple as that. Take this height, take this flag. This is a flag. This is a flag. Right? Take these flags. Take this flag. They are giving us some other information. If our philosophy failed us, that hey, this is coming up, they got reset, this is retracement of 68%, it should have gone up, it did not. It went sideways, 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 sideways. I'll be cautious. First of all, this is a break of that. I will be going short, but this is also, if you just are not aware what is really going on and you don't have these tools, the targets are there and here, don't get in the middle. Let's say you got in the middle of using Fibonacci retracement. They teach you, right? So that's fine. You had a planned failure, you failed, lost a few points. Not a problem. What do? You make these distances. Flag patterns, this is how to use this, and duplicate it on the other side. So once that is duplicated, it gives us a new targets. Give us this target, give us this target. Now this target, we already knew it from other mathematical calculation, that this is the target. Do you see that? If you took a 5-point loss, here you're getting 25 back. So end of the day should be always be winner. And now it makes sense to use this box as an entry box, because we have met our target. So this sideways zigzag pattern can be used as a midpoint. Now there's a balance point, midpoints, there's a lot of science behind technical analysis. You will not see any of those things on the internet. But as a pivot break experts, this pivot triple top is broken. We tested one time, second time. So what we can do, the market is going sideways, that can be your half a bias. Half the distance has been traveled. Other half will be on the other side, correct? I showed you this, right? Midpoint, same thing. You can use flag pattern, sideways action. We're just looking for a balance point. You cannot see the balance points. I can. This A, B, C, D is a balance point. That's why I drew it here. And then if I do the half of it, it should take us to the projected targets. This we know, okay, this is going there, 161 is there, it went there, now our boxes are coming. Now it makes sense to take this initiative move at the bottom of this box. Came down, came up to retest it, and then you hold it, hold it at least to the yesterday's low. And then this happened, in the zig ABCD pattern happened. You cannot see this sideways ABCD. ABCD is the midpoint from here to here. I drew it here. As I showed you, this is one target, second target. Now we have adding this another 3-line targets using planetary motions. They're all pointing to this guy. So I think that is all I could say about it. Going last 2 weeks, how to use it. You have to put it all together. We have much more advanced, sophisticated location detection algorithm which people have learned, and they are almost 100% accurate at this point. They will, over time, as things go up and down, average out 18 wins out of 22. Thank you very much.